Hello, everyone, and welcome back to another episode of WagMe TV. Episode 16 today, and we're coming to you live from Fed Day. Obviously, much anticipated Fed meeting today. Everyone was kind of, looking forward to it. Also, trying to take cover. No one knew really what to expect. What ended up happening? They raised 75 basis points. I know last week in the episode, after that huge inflation print of 8.6%, I believe, we were like, oh geez, this is crazy. Market has been extremely volatile the last week or so after that print. Today, surprisingly, it didn't seem like there was a whole lot of reaction. So I guess rapid reaction from the fellas. Actually, I didn't even introduce you guys today. So obviously,
that day's got them all messed up.
Just went straight into the Fed stuff. But as always,
it's all that's on everyone's mind. Don't worry.
Yeah, coming to you guys, it's obviously the fellas. The All-American Ev Smith, the NFT Lord himself, Alex Garcia, and the Doctor, Doc Mata. All right, boys. Rapid reaction. Fed news. What do you guys got?
I mean, what a week. It's been a roller coaster. I think earlier on in the week, we saw the Fed, maybe not plan a story in the Wall Street Journal talking about that there was going to be a 75 basis point hike coming up on Wednesday. So it felt like there wasn't a ton of news on Monday, but the markets just tanked. And so I think it was really around that story. We saw it leading up to the meeting today, still pretty bearish. Yesterday was a tough day. But Jerome Powell came out, said 75 basis points. It felt like he was kind of singing a different tune than what we've seen the last couple months. He's been very optimistic over the past couple months, talking about just the single 25 basis point hike wasn't much. 50 basis points last month was definitely more than expected. And the 75 basis points today was the first time that's happened since 1994. Pretty historic. And we doubled up, the rates that we have just over the last 3 months from 0.75 to 1.5. So pretty crazy. I think looking down the road, we really don't know what's coming. He didn't have a ton for us out of expectations. I think everything's kind of on the table at the moment. So it's really just going to be hairy from here on out.
Yeah, I think that's a good point about singing a different tune. I feel like this was the meeting where things finally started to set in for people, and I feel like we started to see that in some of the other numbers that they cited. But they were saying that they basically upped the benchmark rate, so the amount that they actually want to hike for the year, from it's up 1.5 percentage points to 3.4% for the whole year. So that's the amount that they foresee themselves hiking, at least in total for 2022. And then they also adjusted that GDP outlook as well, which we hadn't seen, a major adjustment to that in a while, and it got cut by 50% as well. So roughly. But so there's a lot of different kind of changes coming to the tune that they're singing, to your point, Evan.
Yeah, I think that's a great point. And it's they try to kind of push this out so that they can give a little bit of visibility and a little transparency to what's going on. But I think, what this week has really taught us is that anything can happen, right? They have these goals that they want to go and hit. Will we get to those? Will they have to pull back at some point? That's something that we'll just have to kind of wait and see, right? I mean, this is the biggest hike in, what was that, in 94? So almost 30 years, pretty much. And like Evan mentioned, the markets got decimated on Monday, right? And they had been getting decimated this entire week. And so it was interesting, to your point, so we didn't really see much action today necessarily. And I feel like that's kind of because the market might have telegraphed this from some of that news that had come out from the inflation print. Everyone was all right, they're gonna have to increase the interest rates more than we expected, right? And so they kind of telegraphed that in a way where everything started to tank. And then today, when things came out as was expected with the 75 basis points, we didn't really see too much action, and we even saw a little bit of a tick up. So feels like we always say this, it was like a little bit priced in, but just like the market kind of reacts a little bit early and tries to predict things moving forward. So, you know, the big piece is inflation. They're going to try to stop inflation. So there's really no choice but to increase the interest rates. The question is by how much, how quickly, and when are they going to kind of reverse this to go the other direction?
And real quick, an interesting note on that 1994 rate hike, you know, 94 to 95 was like commonly seen as a soft landing that the Fed was able to orchestrate. So I think when we hear about this stuff, you know, we get nervous about, you know, this is an auto recession indicator. It's definitely coming. When you hear people talk about it, soft landings are still on the table. Saw it in 94, so you know that's definitely still in play.
Yeah, and I think
right.
the other like lagging kind of asset that's coming down the pipe is also real estate. And you know, we were already seeing mortgage rates at 6.3% before this hike. So an average mortgage rate is probably going to be, you know, well into the sevens after this hike once everything settles in. So just in the last 6 months, like the real cost of buying a home has gone up 50%. So we're going to start to see that. And I think we've, you know, once in a while I'll check on houses and I'll look around, and like you can see that people are starting to kind of be a little bit more sensitive to wanting to get rid of their house sooner. You know, you see price cuts now here and there. But we're seeing, you know, a serious spike in that, and it'll probably continue to go up at least for the foreseeable future.
Yeah, that's interesting. I mean, we always talk about you know, what's kind of the next shoe to drop, right? And it seems like, you know, we've been kind of having a pulse on the real estate space, and with the rates going up so fast for mortgages, there's just no way it doesn't have an impact on demand, right? So will definitely be interesting to see. I also think, like, do you guys know exactly what Jay Powell said in terms of like what to expect for July? I believe he left 75 bips on the table for July as well. And I think one of the things that's interesting that came out of the last week is like the Fed is, I think this last week showed that the Fed is very willing to pivot kind of on a dime, right? Like up until last week, you know, the expectation was 50 basis points. Then that, you know, inflation print came in, I think on like Wednesday or Thursday. And, you know, within the course of 2-3 days, expectations for, you know, the rate hike went up, and everything else, just kind of what you guys were saying, got priced in from there, right? And so risk assets just sold off heavily over the last like 2-3 days. And so that's one thing kind of that I found interesting is like they're willing to like take the data like even less than a week prior and make the like basis point decision like rapidly, right? So it'll really be interesting to see. I think everyone already pays attention to the CPI numbers enough, but it just kind of, you know, drives that point home too, where like that's got to be like the main thing. If that was able to sway them at such short notice, then like that's going to be like the main thing that people are going to be looking at.
Yeah, and so what do we have coming up on the calendar? Because it feels like we just had so much news in the span of 7 days that you know
we need a break.
We need a break, right? Like what's coming, man?
Yeah, let me pull up the old economic calendar. So,
and I know Powell had said that for July, 75 is on the table. And that makes me wonder whether investors are going to expect 75 or expect 50. And then what we're going to see in terms of the back end of that. So I'm curious to see what the data this is.
So we got this here, FOMC statement. That was today. We've got jobless claims. So it's very clear, it seems like in, you know, Powell's, you know, in his like post, you know, the conference, they're looking at the unemployment numbers, and the unemployment numbers are still very strong. And so they're kind of leaning on that to be like, the economy can handle more. So that's going to be interesting to watch. Oh, let's see what happens here. This could be another, anytime Jerome Powell is talking, you can guarantee the market's listening. So Friday AM, heads up for that.
I think that maybe that 10 a.m. call on that same day, the leading economic indicators, that's something where we're still looking to see if we hit 2 quarters in a row of negative GDP growth, right? Which would officially put us in a recession. So I think anything around economic indicators and GDP is going to be on the watch.
Yeah, that's a good point. I think we're probably gonna.
Is that
It's
GDP
interesting.
estimate up there? Was that month over month? That like minus 0.4%? Is that, or it's year over year? It's got to be.
I think that's.
Oh no,
probably-
that's just the median forecast. I
The
don't
median
actually know
forecast
if
for
it's,
year.
I don't know if it's annual or month over month. Honestly, I would assume that it's annual.
Yeah, it's probably annualized. You're right.
And I guess that's a number that we haven't really looked into either. If it's something where we're growing by or not growing by negative 0.1, it feels like anything around 0 is pretty safe. The minute we start to get around maybe like a full percent, maybe 2, like I don't know anything about the history of our GDP growth numbers, so I think that's something we could probably dive into on another epi.
Yeah.
Yeah.
Speaking of the housing market, the new home sales definitely something to keep an eye on next week. Overall, it seems like not a total like over the next week and a half or so. Nothing like super crazy, but definitely things to kind of keep the pulse on, right? Like maybe nothing that's gonna drastically move the market, but like just kind of things to kind of keep a pulse on where we're at, how things are going, leading up to kind of like the next like flurry of data. It seems like the economic data kind of comes in flurries, and the market moves like really quickly all at once. So yeah, we'll definitely be keeping an eye on that.
Yeah. And I think one other point too is we're probably going to see, China come out of lockdown here, and the demand is going to shift drastically with, whether it's oil and the lack of transportation they've been having on their side. So I think, there's probably a few indicators that'll be changing over the next month, just with, the world's second largest economy kind of coming back alive again.
I haven't actually seen much on that. Like, have you been keeping a pulse on that side of things? Like, are they ready to not be on lockdown anymore? Is that?
Yeah, I think so. I mean, I think they're always going to have that no COVID policy, but from what I've heard, it's tough to, like, let's say they were to have another wave in the next month or two. It's tough to like keep that negative sentiment, at bay for a while in a country, so you would think they're probably going to stay open, open up a lot of the different industries that have, not been, operating at the same capacity. So a lot of the stuff I've heard is just around like natural resources, like usage of oil, different wheat and grain that needs to be sent over there from the US. So
I mean, it's a great point, right? It's like we keep talking about inflation and how the Fed's going to battle it. It's like this perfect storm of like supply side factors that are also, contributing to this, right? Yep. There's still a war in Ukraine, right? That is still going on. There's all these supply chain disruptions. There's the labor shortages, right? Pandemic restrictions, which I haven't been keeping up with that either. So maybe we should check in on that. But hopefully that kind of starts to die down a little bit soon. So, it's all these things that are kind of impacting this as well. So it'll be interesting. It's a lot to keep your eye on. So we're here to help you do that.
100%.
One last question. So I think I've heard the word stagflation kind of thrown around in the last couple of weeks. I really don't know too much around it. Do you have any like background on what stagflation is?
Yeah, so stagflation is basically an economic scenario where you have negative GDP growth. So you're in theory in a recession, but you also have inflation that's like out of bounds, right? Usually what the case is like when your economy is contracting, you don't have a lot of demand for goods and services and stuff. And so inherently the inflation number is low. Even there's cases where if you're in a recession or a depression, it's actually a deflationary system, right? Where, the prices are actually going down, right? or staying flat pretty much, right? It's very rare that you see a situation where basically the economy is contracting, but at the same time you have runaway inflation. That was the last time we saw that economically was in the 70s. And people are looking back to the 70s to kind of see what the playbook there was. Back then we had Volcker that came in and just jacked interest rates up, sent the economy into a just straight up nosedive.
Yeah.
And we had like 5 to 10 years of like pretty rough circumstances, and so people are kind of looking at that as kind of a stagflation playbook. People also don't think that Jerome Powell is Volcker. Also, even if he wanted to be and jack up interest rates extremely high to just like bite the bullet, the thing that you have to realize is the US has way, way, way more debt than it did back then. And so when you're increasing the interest rate, your debt service cost as a country goes up significantly, right?
And what's that mean? What's debt service costs?
Debt service is basically the interest that you have to pay on your debt.
Right. Okay.
Right. And because we have so much more debt, like back then in the 70s, we definitely didn't have as much debt as we do now. And so increasing the interest rate didn't just make the government completely insolvent, right? We're in a situation right now where, let's say we want to just jack up interest rates to like 10%. It wouldn't even be like feasible because the government would like their debt service costs would go up so much that like they wouldn't be able to, like it would be terrible, right? So another thing to keep in mind where like that kind of Armageddon scenario that Volcker used is like not even really on the table anymore, right? So
does that mean that like to piggyback off that, does that mean we're basically playing like within like I'm thinking of like bowling ball like bumpers, like where we can't like what if we get to like 8%, 9%, 10% interest rate? Like let's say we get that high, just hypothetically, and we're still printing 4, 5, 6% CPI. Could we essentially be in like a chokehold as an economy?
Yeah, I think there's only so much you can do to curb demand, right? Or curb demand, right? Like there's really only so much you can do. And at that point, I think they would have no other choice but to just, attribute it to supply side factors, right? There's really only so much you can do in terms of like increasing interest rates that like curbs demand from like a elasticity point of view, right? I mean, at that point, it's just like people are still like the demand is high enough that prices are still high, and like the supply side constraints are just making the prices like shoot through the roof. That's a lot of what people have been saying in terms of, kind of this weird thing where like, how much does interest rate increases actually even help this that much?
Right.
It's because like if it's all supply side,
Exactly.
inflation,
Yeah.
your interest rates going up aren't really going to do anything, So yeah, definitely it'll be interesting to see kind of where we go from here. But at least it seems like hopefully we have like at least a week, maybe 10 days of a little bit of calm when it comes to like macroeconomic news.
Take a breather.
Yeah.
No turbulence in the
Have a
foreseeable
beer.
future.
Yeah.
Have a beer. Don't look at the charts and have a beer.
Well, the crazy thing is like, even if in the crypto world, even if the macroeconomic scene is like doing all right, you might also have just random things going on elsewhere. And I feel like this week was a perfect storm because there was just Ethereum, the whole thing was just an absolute pandemonium. And so, we have a few different topics to cover in terms of like on the DeFi side within the Ethereum ecosystem, kind of some updates on what's going on, what we saw this week. Garcia, Amada, you want to kind of take it away on the Ethereum merge news?
Yeah. Okay. You want to take it, Mata?
Yeah, sure. Why not? I mean, we might as well just kind of do a super high level overview of kind of what happened, right? And then we can kind of go a little bit deeper into each of those spots. What do we think about that?
Yeah, sounds good.
Awesome. So in general, right, the market was not good in the last week. We've already talked about that just from a macro standpoint, right? So Bitcoin, Ethereum, all the cryptos that you're watching, they're plummeting. ETH seemed to plummet a little bit further than some of the rest, right? So what happened? As we know, and we talked about last week and a couple of weeks before, right? There is this transition that's expected to happen. It was expected to happen in August. They call it the merge, and they're kind of testing that out. They did the dry run on Ropsten. This was successful, right? It went well, it was successful, but it didn't go quite as smoothly as was kind of anticipated for them. So they did discover some bugs. It drew up some fears that the actual merge would be delayed a little bit. This was then actually confirmed by developers as they actually agreed that the difficulty bomb, which I have an article here as well on this, they basically agreed that the difficulty bomb would be pushed back a few months or so. And so as a little bit of background, the difficulty bomb is intended to motivate proof of work miners to transition to proof of stake, really by making blocks more difficult to mine. And so had it been allowed to continue, Ethereum actually would have been unusable after just a few weeks' time. So they've delayed this, which means essentially, right, that they're kind of delaying this merge and making sure that everything is buttoned up moving forward. So the thought is that the merge is now likely to take place in early fall rather than late summer. And so a lot of these leveraged traders looking to go long were actually liquidated, even on top of this nice drop that we were seeing already. And so that's kind of, before we get into all the other pieces, that's kind of where we were at in Ethereum. And I kind of want to see what you guys' thoughts are on that. And Garcia, if you have anything to add there, and then we'll dive into kind of some of the other pieces that kind of cascaded into.
No, yeah, I think you covered it really, really well. I think, I think like we talked about last, I think maybe it was a couple of weeks ago, like it's so important that this goes over smoothly. So I think the thought is if, they need to delay it 2 more months and that's what leads to it working out all right, like they're willing to do that and take because when the devs came out and said that, they basically said, because everyone's wondering like, hey, like what are the chances this thing just gets pushed to next year? And so I was trying to find the tweet, I couldn't find it, but one of the devs, the guy that actually said that it was going to be delayed, he said, well, hey, there's like a 1 to 10% chance it's going to be moved to next year. So most likely like 90% chance ish or more that it's going to take place this year. But he's, saying kind of the same old that it's for the best of the community if they, delay it. So I definitely understand why they're doing it. But at the same time, definitely took a hit on the ETH price and then had kind of some of those cascading effects that we were talking about.
Yeah, I think a lot of this stuff is probably less concerning than maybe some of the news we had seen recently. Like, we talked about a couple of weeks ago, like you said, Sia, to have your testnet going live or going into beta like this close to launch, there's probably going to be a chance that gets pushed back. And that's just because of the amount of difficulty that comes with these problems. The good thing on this is that these are all problems that either Ethereum has solved or other proof of stake blockchains have solved too. A lot of this stuff isn't like new technology. It's just the implementation part is really what they're struggling with. So yeah, I think like we talked about, like it needs to happen. It's not gonna end the blockchain. It's not gonna lose anybody's wealth. But yeah, it's something that you want a very strong test network as a developer, because your customers are going to rely on that trust that you have with them, and that trust only goes as far as the stuff that you're working on, which at this point is the test network that they're working the kinks out of.
And I think you should keep riffing on that, because you had a good point before we hopped on and started recording that it's a little bit more urgent than maybe people think, because as an example, companies like Salesforce and other companies are going to require, something that is a little bit more eco-friendly, a little bit more, able to scale without those crazy gas fees, without kind of harming, the environment and so on and so forth. So yeah, I think that was a good point to bring that up too.
Yeah. And that's a good call, Sia. So, I mean, the biggest thing that we're seeing with Salesforce and, selling NFT cloud to other, companies that want to drive that brand engagement through NFTs, it's that, all these corporations have ESG initiatives that they need to hit deadlines by. Like I think a really big one is that like China said they were going to be, 100% renewable energy by 2060. Like there's these huge goals that countries and corporations have that need to be hit. And because of that, like proof of work is just not in that roadmap. Like it can't be. And so they need proof of stake. This is something that Ethereum has to do sooner than later, because there's going to be corporate money flowing into this space during this downtime. And, Ethereum wants to be that trusted advisor that they can build on top of to drive that brand engagement.
Yeah, and it's an interesting point too, because it's like, you hear this all the time, the big debate, like is Bitcoin bad for the environment? Is proof of work bad for the environment? And to your point here, Evan, like that doesn't necessarily matter, the answer to that, because perception is reality. If everyone perceives that proof of work is bad and Bitcoin is bad and et cetera, right? They're going to have to go a different direction in order to do that. So I completely agree with the sentiment there around kind of the need, and maybe it's a little bit more urgent than we're kind of thinking.
The other thing with the urgency is just you're going to inherently, I think we touched on this in a few other episodes, you're going to inherently run into just so much more competition. It's like that first mover advantage that Ethereum had. I mean, you can just see it like on a daily basis, almost like slipping away, right? Like others are making,
it only holds for so long.
And yeah, exactly. Others are making bigger strides. They're having all sorts of delays. Oh geez, did I just freeze?
You did, but we can hear you.
I mean, I'll continue your
We'll
point.
go here. Sorry. Yeah, camera problems. But yeah, like you can see almost on a daily basis, like their lead is just shrinking, right? And when you have like big companies and stuff like now caring about this ESG type messaging, completely agree with you, Armada. Like the perception is the reality. It doesn't even matter if, on a relative basis, Ethereum and Bitcoin mining is a tiny, minuscule fraction of like what like big oil does or something. It doesn't matter, right? It's just like
it's the narrative.
It's the narrative, right? So yeah, it'll.
I mean, it's
hopefully
exactly
they can get it done. Honestly, hopefully they can get it done. Like that's what we're all hoping for, honestly.
It's the network effects. It's the idea of like when social media companies were starting up, who could get the best influencers, who could get like the most connections on their apps, because you're right, Zoe, that first mover advantage is huge. Once you've got your friends on something, you want to be a part of that. Once you're seeing profits being able to be made and trust being established on Ethereum, you're not going to want to go to some other network. So.
And to continue on this, right, as I was kind of mentioning, right, we had the drop that was going on. Then we had leverage traders looking to go long. They start to get liquidated. So you add on top of this, right, this assumed delay and everything that's going on with Ethereum causing it to drop a little bit further, right? But then we start talking about Lido's staked ETH, right? That starts to fall below the peg, leading to even more liquidation concerns on places where staked ETH is being used as collateral. So that brings up kind of, I think, one of the biggest stories of the week here, and I'll just share this really quickly. So Celsius actually paused some of their withdrawals. They're one of the largest holders of stETH or staked ETH. And so, that led to rumors that it could face liquidity shortfalls given, a fall in the value of stETH relative to Ethereum. On top of the potential losses that, Celsius could have incurred due to DeFi hacks and the Terra collapse, everything like that. There's just question around liquidity and what that looks like. And it wasn't really a great look for them to do this at this time. And, they kind of cite extreme market conditions, which is absolutely true. It's just a question of, is that the full story? I know you had a couple points on that, some as well. So
yeah, no, definitely a lot of, second and third degree effects of all this stuff kind of that we're seeing. I think, one thing that might be useful, just for the viewers that don't really know like the whole story, is just a review of like what actually is Lido and like why they became so popular in the DeFi space. So if you were to stake your Ethereum for the Ethereum 2.0 merge and that whole thing, before Lido, your Ethereum was completely locked up. There was no way for you to unstake your Ethereum. You'd be earning the yield and everything, but there's no way for you to unstake it, right? And so it raises the question of like, okay, this asset is locked up. Like, how do I provide, like, how do I utilize it in any way, shape, or form, right? Before Lido, the answer was you couldn't. It was just locked up. Lido was the first to say, okay, you can come stake your Ethereum with us. So you stake through us, we stake your Ethereum and we provide you that yield. At the same time, in return, we provide you with a token called staked ETH, stETH. That's what Armada was talking about, right? And that's essentially a receipt that says, okay, I have this much, staked Ethereum, right? Now you can go, you can think about the possibilities over here from the DeFi context, right? You can go take that staked ETH and then go do whatever you want with it in the DeFi space, right? You can borrow against it, you can post it as collateral, you can do all sorts of things, right? You can earn yield on it additionally, you can lend it out, you can do all sorts of things with staked ETH. The thing with staked ETH is, it is when the merge occurs in the future, it will be one-to-one redeemable for Ethereum, just normal Ethereum, right? It's a receipt, right? I put one Ethereum in Lido to stake. I am now receiving one staked ETH, right? And so if you go and you see the chart, it's right around one-to-one peg. Of course, there's some swings just like anything, but it's right around one-to-one peg up until very recently here. Last week is kind of when it started going down, lost peg. And over here, just a few days ago is when it really started going down. And the question is like, why? Like, this isn't, everyone, the gut reaction is to be like, oh, this is a, Terra Luna situation, right? But in reality, like, it's not like Lido has done anything malicious in this context, right? Like, in the future, your one staked ETH is still going to be redeemable for one Ethereum, right? This is not like there's no collateral backing, like a whole Terra Luna situation where it's like an algorithmic peg or anything. It's a very different situation. So the question, it becomes like, why the hell is this breaking peg then, right? Like, this has really no reason to break peg. And that kind of brings us to, the whole Celsius situation that Armada was alluding to. Now, the thing is, when you're in a bear market, and you're like a bank and there's no, regulations or anything, we're right back in like the 1920s, right? Like, if there's a bank run, if people are losing money, they want their money and they're going to go and they're going to withdraw it. And if you don't have that liquid cash to give your, bank users, then you're in trouble. And that's exactly what we're seeing here kind of all across the DeFi space is, people basically got way too in over their skis and, they're paying the price. So that's why, the reason why they're halting withdrawals is because they don't have enough liquid assets at the moment to pay those people back, right? And then the question is, oh, are they like, is this like a total malicious thing? Like, they don't have anything in the bank? Like, no, they do have a lot of assets. And those assets are just locked up though. Like, Celsius is, I think, the top holder of staked ETH on Aave. So they're a massive holder of staked ETH, right? And then they also have ETH that's staked independently, right? Not through Lido, just actual staked ETH. And that is not liquid at all, right? Like I mentioned before, you can't do anything with that. So when all your customers are coming to you trying to, get their money back, you got to do something. And what they're doing right now is they're just selling their staked ETH. And that's why you're seeing the peg just go down, basically, right? Like, they're desperate. They need cash on hand. And, they're willing to take a lower price for their staked ETH because they have no other choice, right? This is a pattern of, that was kind of a mouthful. So if you guys have any questions, happy to go
I think that was super helpful.
That was super helpful. Yeah. And real quick, so if I were to go on an exchange and buy staked ETH right now,
Mhm.
you could assume that, once Celsius has kind of, been able to pay off their clients, or sorry, their users, it would return back to one.
Yeah, I mean that's what a lot of and that's what me personally, obviously not financial advice. This is what me personally.
NFA, but 15% discount. No,
After Luna, nothing is financial advice.
Yeah, so this is what I'm watching very closely, is because it's all about risk reward, right? We were talking about this in the Luna episode. It's all about risk reward, and right now, like, do I think it's good risk reward to buy staked ETH at a 5% discount? No, like I don't think that's great risk reward, because obviously we're in a rough situation. I think Ethereum might have more downside to go, but let's say this really gets hairy and like staked ETH unpegs by 20%.
Yeah.
All of a sudden, if you're like a long-term believer in Ethereum, and you will, whenever this merge goes through, you will, and you're able to access that ETH 2.0, and you will be able to exchange that for 1-to-1 with normal Ethereum. This is something I'm very much like looking at right now, is just like paying attention to the peg, because you can essentially get Ethereum if you're holding it very long term,
right,
for a discount. If you're not planning on using it for swapping or anything like that, right?
If you can like perfectly time the bottom, it's going to be great, right? But we don't know where it's going.
That's just the story of life, isn't it?
Right. That's interesting though. Thanks for running through that.
Yeah, for sure. And it's definitely like, it's pretty crazy, because you're seeing a lot of like huge institutional investors and stuff just getting in really brutal situations. When they get closer and closer to liquidation price, they're having to do things to post more collateral. And we always say, like, it's the whales that really move the market, right? It's like retail can do so much, but if a whale, like if a bunch of whales like get in trouble, and like these are like the whales of the world too. It's not like just a retail whale. Like these are like huge institutional investors. If they get in trouble and they start having to like dump their bags, like we're gonna get rocked. So I don't know. We'll see kind of how it goes, but
yeah, we'll be keeping an eye on that. I think that'll be a story that continues to kind of unfold. I know there's been word of potential AMAs with the CEO Alex Mashinsky and Celsius in general. So we'll look to hear what they have to say. And I've heard of potential like acquisitions from like Nexo and things like that. So I think there's a lot going on there, and nothing's really been set in stone or decided, but there's some options to kind of get out of there. I think, for me, when I saw the news, it was Monday, right, that this came out, that Celsius was pausing withdrawals. I think for me, it was just another reminder to, practice self-custody, make sure you have that off of these centralized exchanges as much as possible. And it's kind of what all this is about, right? Make sure you have ownership. But yeah, that's kind of my last piece on that.
Yeah, that's a really good point. And the other thing, to your point, Zoe, like what a lot of bigger whales are looking at too, is they're just watching the liquidity get erased, and they're saying, well, hey, why would I jump into this like basically burning building before I know where the bottom is, like when people are actually going to come back and start trusting DeFi again.
Shit, I didn't even see that.
And I think so. Yeah, this is all a DeFi. So we're a third of the liquidity that we were less than a year ago, 9 months ago. So, and the liquidity got cut in half within the span of a month here, from beginning of April or late April to mid-May.
I mean, that was basically just all the TVL of Terra Luna just getting
literally, it's just all literally. There it is. And like the other thing that I thought was interesting is, since you mentioned like these big venture-backed whales is kind of what drives the market. For the first time, so this is a month over month showing the percentage breakdown of what venture capitalists are investing in crypto. So it's like crypto financial services, NFT gaming, DeFi, etc. And this month over month, April to May, this is the first time that they actually reduced their investment in DeFi. So I don't know if, so this is actually active deals. This isn't like, like their holdings, like this is actual deals of like them saying, okay, we're putting down 50 million or putting down 20 million. So it's interesting because like some other sectors, they're actually upping it, crypto financial services. So things like FTX, they're upping it, things like, what is this? This is Web3 investments. So 9 to 12, and then others they're shrinking too. But at the same time, it's clear that the whales are not ready to hop back into DeFi. At least it seems like.
That's interesting. That's really interesting.
Chart.
Yeah, we'll be on this one. I don't think this will be the last time that we talk about this. We'll probably talk about it next week too. Speaking of risk and reward, our boy Soham went in on a little NFT and had a little action there. We'd love to hear about that.
Making money in a bear market, baby.
Seeking alpha.
You don't make money till you sell, though. So
That's true. That's true.
We'll see what happens. But I gotta give credit where credit is due. Like I wouldn't have known what to do if it wasn't for the NFT Lord himself over here, Garcia, giving us he was giving us pointers months ago, and so I just kind of used a little bit of what I learned from him, and just came across this project actually kind of by accident on Twitter, but just seemed really cool. The project's name is Rebels. Super cool project. I think they've been working on it for about 6 months now. I only just discovered it like last week, just in time for their public mint, which I participated in. And so I can just give you guys just like a quick rundown on the project in general. Let's see here. So we'll go to their website, which is honestly just fucking badass. I'm not gonna lie. Like that's what drew me to them in the first place was, I looked at some of their artwork and stuff, and it was really cool. Like they've definitely done a very good job with the artwork. We can go, kind of to their gallery here, and like,
yeah, this is slick.
Just
These are awesome.
absolutely like just really well done design, and like they just like are a good balance of like clean but also like badass, I think. So
Absolutely.
That's what honestly like drew me in the first place. Then I started learning more about the project in general, and it was really cool. So Garcia, he always telling us to like look at the team, right? And so that's another thing that really stood out to me about this project was just like the team is like straight up A+. Like, so the two founders that are, make themselves like on available on AMAs and like things like that is Nas and Sass. It's like a rhyming duo. But Nas is like, he works at, I think he does security for Andreessen Horowitz crypto. So he's obviously very
awesome,
well connected. And then Sass works at a company, I believe, called the Hudson River Trading. And they're also very involved in the crypto trading sphere. And so I went and listened to a bunch of their, when I was just doing my due diligence, went and listened to a bunch of their AMAs, went and listened to a bunch of their interviews and stuff that they've done online, their Twitter spaces and stuff. Really, really good. And I can kind of explain a little bit about why this project is a little like, in my view, is different than kind of your general NFT projects. You'll also notice for the EDM heads out here, Blau, our boy, is an advisor on the project. He's been on a couple of the Twitter spaces and stuff. We went through, I think, one of his projects, which was Royal, a couple of weeks ago when we were talking about the whole music NFT space. But yeah, you guys can go check out like just a really, really solid team all around. They all have their like links and stuff in here. So obviously green flag on that. In terms of, this is just like the distribution and stuff. In terms of what stood out to me about this project, right? And why I think it's unique. So in our previous, I think it was like 1 or 2 episodes ago. Yeah, maybe the last episode when we were talking about the NFT market, right? And like people are kind of just done with your run-of-the-mill profile picture NFT project that really has no use case, has no real future, has no utility, right? This project aims to change that, right? And so the way it's been described by the founders on their interviews and stuff is basically they view this as is not necessarily like an investment vehicle or just like a singular photograph or something like that that will like accrue value like over time, and like the only reason why you're holding it is to like flip it to somebody else. They actually are coding this smart contract to make it actually a customizable NFT, and they kind of view it as a canvas for your Web3 persona. So the problem there, like that they're trying to address, is basically, currently, you have a profile picture, but that profile picture isn't like dynamic, right? Like tomorrow, if you're involved in another NFT project, or you have another achievement somewhere in Web3 or something like that, you have no way to show that as your Web3 persona as it stands right now. You just have to change your entire profile picture, right? Or change your, entire photo wherever you're using your photograph, whether it's on wherever you're using your NFT, whether it's on Twitter or Discord or wherever. You just have to change it, right? Not very dynamic. Here, you're going to be able to customize. You're going to have your Rebel, and that's going to be your like canvas. And then you'll be able to add patches, add different features, add different basically artifacts to that, right? And so then you start seeing kind of like the second and third order effects of this, because sure, like their NFT company can like offer patches, and like they're gonna have, based on your hierarchy in the Discord and stuff, they'll have different patches for that, things like that. But they're also going to have integrations with other NFT projects, right? And so now, let's say you own like a Bored Ape and a CryptoPunk and like a Mutant Ape or something like that, right? You can now have patches on your Rebel that signify all those things, right? Then you take it one step further, and this is where I think it gets really interesting. And this is where I almost imagine it as like when Apple opened up the App Store to the public, right? Where just any developer could go out and build an application. Now you have a situation where you have this canvas and you have opened it up to developers all over, NFT developers all over, to basically go crazy with it, right? And that's where I really think the potential of this project could be. I'll show you one example where one of the members of the community.
So that's really cool. So I actually really like that idea, because I think you're very spot on that it's very static right now, right? Mm-hmm. And you can't really show how, like even in like Call of Duty, when you get an achievement, right, you can like you unlock some sort of skin or some sort of new gun or etc. Right? I like the idea of kind of being able to be a little bit more dynamic and kind of a little bit more personable, right, in the Web3 space.
Yep.
Is anyone else doing that at the moment? Like I would assume there are, but I've never heard of that. So I thought that was really cool. I just didn't know if you were aware of that.
To my knowledge, no. But then again, like, I'm not really sure. Like, Garcia, have you ever heard of this being done before?
No, I haven't. I haven't. What I've heard is, this can happen almost in like a second layers. So like if I were to like with my Bears Deluxe voxel, if I go into like sandbox and earn something, or if I go into NFT worlds and earn something, using my voxel, like I might be able to have something that I can carry around within that world, but not something that's actually coded into the NFT, right? So like this is actually new, where you can kind of do this, like, but like it's 2 degrees of separation almost, but you can't have it tied to your NFT smart contract, or your NFT token. So yeah, to Soham's point, this is definitely new.
It's also what's important to note too is like, let's say tomorrow I want to sell my NFT, I want to sell my Rebel, and I have like 3 patches on it. Those patches do not go with the NFT, right? Those patches are things that I have like in my wallet that are then displayed with the NFT, right? So if I sell it to you, when you have it, it'll be blank. right? It'll be now.
That was going to be my next question.
So
That's
are they
no
gonna have
longer a piece of that.
Oh, okay. So they can have a secondary market for those patches.
Well, so the thing is, they're
Is that the plan?
NFTs. Like that's the crazy.
Yeah, yeah.
thing.
So
That's
like, are
what
they
I
gonna
was
have basically like another collection on OpenSea that just has like Rebel Knight patches or something like that?
Yeah, exactly. So this guy, iRelic, he's one of the members of the Discord and one of the members of the community. Shout out to him. But he already made a collection. And so these will be able to,
Oh, sweet.
they're basically just like a collection that you'll be able to have as a patch, like on your guy. The other thing, there was another guy in the Discord who I was chatting with briefly. He came into the holders chat and he was saying how he's a 3D artist and he's interested in collabing and creating like 3D 3D artwork and stuff that can be used for I guess patches. I don't even know if you could call it a patch if it's 3D, but some sort of 3D artifact that you'll be able to have with your NFT. And so this is what really got me thinking. It's like, okay, we're like 2 days into this. This project hasn't even revealed yet. And you already have a few people like building on top of this, right? And that's why it really kind of like sparked my memory in terms of like what we all kind of experienced with when Apple opened the App Store. It's like, would you guys have even thought like the App Store would be what it is today? Like, but the thing is, when you open source it to everybody, all of a sudden, like all these people have like crazy ideas on what's possible, right? And it just opens that realm of possibility up a lot. The other thing I really like enjoy about the project is like no one's like really worried about the floor price. It seems like, I mean, there's like some people and like everyone's obviously happy if like the floor price is doing really well, but I think like a lot of people just really think the idea is really sick. And so, it seems like they've done a very good job of the community building aspect of it too. And I know, Garcia took us through, why that's so important in terms of, an NFT project. And I think they've done a very good job of that too. So I don't know, it'll be interesting to see, what happens. I know the reveal is supposed to be within the next week or so. But yeah, it's just been a super fun thing to kind of get involved with over the last week, and we'll kind of see where it goes.
Are those okay, go ahead, Mata.
No, I was just gonna say, clear your head of all the BS going on in the market right now. It was honestly nice to just have you there, just be like, yo, this is super sick. It's like, yeah, I remember when we used to just like plug random projects and everything was good, we were in a bull market, everything's great. And now I feel like, the last week, 2 weeks, 3 weeks, it's just been bad news after bad news after bad news. So props to you. Go ahead, Sia.
No, the only thing, and that's a great point, Mata. Like, it's awesome to see some shining light in the dark depths of the bear market. But the one thing I was gonna ask is like one of the big things with this, like the appearances of NFTs and like the like any sort of like customizability. Like the first kind of question that comes to mind, because it's been standard like now, at least for new projects, is do they plan to integrate with other metaverses? So like, will they have one-to-one voxels for like a sandbox or a Decentraland or like a like an NFT world or anything like that, where like your customizations would carry with you? Because that could be interesting, because then they could even play it on another scale, where if they have their own areas in the metaverse, like maybe they tier it where, okay, you have this patch, you can do this, you don't have this patch, you can do this. And all of a sudden you're talking about, different tiers to the community and different ways to bring in different activities across those metaverses. So I'm wondering if they're planning to do anything like that.
Yeah, and I kind of like that art first approach. Like, I think a lot of the collections we were looking at late last year were the ones where they had their own token for the collection. And it was, hey, come in here, this token's got a great price, you're going to make more money if you like continue to buy more NFTs. And obviously we've seen that's not a sustainable business model. But when you look at like this and some of the other, I know the other side got a lot of flack, but what we did see coming out of that were different potions that basically like your Bored Ape could have, and it would allow for different engagements or abilities. Like once you we're in the other side metaverse. So that's a great point, Sia. Like it'll be interesting to see how these collections continue to build towards being integrated in those different metaverses, because at the end of the day, like that's really kind of like the best utility in my mind for these collections.
Yeah, you guys bring up some really good points. I personally like have not heard any talk of like in the stuff that I've listened to, which in the grand scheme of things is like not that much. I only just kind of got accustomed to this project like last week. I haven't heard anything so far on like plans for the metaverse and stuff, but I don't know. I could probably put it in the Discord. I think they have a AMA questions like section. I'll just drop it in there and kind of see if that's like on the plan at all. What I will say is like they don't have a roadmap, because what the founders were saying is like most NFT projects have a roadmap and just they promise a bunch of stuff and just under deliver. So their goal is to basically promise nothing and over deliver everything. And so, I mean, like I said, it kind of goes back to the team, like Garcia was telling us a couple months ago, right? Like a lot of times you're kind of just like betting on the team, like really pulling through. And so that's definitely, I would be lying if I said that like having such a solid team behind the project is definitely one of the reasons like that I took a shot on it. So we'll kind of see.
I love that. And I think it's, it's the fact that they're in a market that isn't fully developed. Like they're creating the market. So, they could bullshit their potential users and tell them, what usage this is going to have, but you're totally right. This is something that they're building by themselves. And I'd love to circle back when we get some of the some more information around the art release and basically how those patches and different items are gonna work with the rebels.
Absolutely.
And it's cool how it kind of aligns, right? It's like we were saying in the bear market, that's where the development happens. That's where things are really pushed forward. So super exciting to see this going on and to kind of get a little bit of exposure to it through Soham, living vicariously through you.
Yeah.
Hey, maybe it's only going to be vicarious for so long, man. Like maybe the next time we talk, you guys are going to be rebels.
I'd love one. They look great.
Might have to be. The question is, which one are you putting as your new Twitter profile pic?
Well, that's the thing. I've got a few of them. So wait, also in the Discord, they've been saying like, Garcia, you might know the answer to this. Is there any value of not revealing your NFT and keeping it as like a card? Because some people have been saying like, oh, I'm going to, reveal a few of them here and like keep some cards. And so like some people are revealing only like a few of them. And I didn't realize, I didn't really understand like what the point of that was, but I don't know if you know.
Yeah, I didn't even know that you could like choose to reveal it or not. Like I thought basically that was like set, and then you just like refresh your OpenSea and it would just across the whole collection, whenever you hit refresh, it would reveal it. So that's definitely news to me. Like I know that you like most people, like we've talked about before, like really the only reason to hold like something post reveal is if you want to hold it long term, or if you like you want to go roll the dice and get a rare. But at the same time, like I think in this case, like most people do, like they'll lay off some to de-risk and then they'll sell some other ones. But I haven't seen it where you can actually like adjust the reveal. I haven't seen that before, so that's interesting.
Yeah. So a couple of things, unique things now that I'm thinking on this project. One, yes, you have the choice to reveal, it looks like. So you could just keep the card. The mint was just for the card. Speaking of, the mint was all throughout very smooth. I paid $4 in gas. Like they had the contract very, very optimized. And I know a lot of other people like on the in the Discord were saying great things in terms of, the contract was technologically very like optimized in terms for gas. Barely paid any. And with the horror stories you hear nowadays on like what's going on with gas fees and stuff, that's obviously nice to see. The other thing, Let me just go to their website here.
Because I wonder.
You will be able to choose, like I said, whether you reveal it or not. The other thing is the public sale didn't sell out, not even close. Like it was a Dutch auction. It started at 0.8 Ethereum, and then it went all the way down to 0.1. And even at 0.1, it didn't sell out. So they had like 5,000, I think, excess like NFTs, and they just burned them all. So the original supply, if we're talking about like the tokenomics side of things, I know Garcia, like you were also teaching us a lot about that side of things. Like it was originally supposed to be like 13,000 supply, and it went down now to like 8,500. So in terms of that seems pretty good in terms of like floor price and that sort of thing. The last thing I'll say is the rarity aspect. A lot of different projects have like, you know, some characteristics that's like 1% of, you know, the things have them and stuff like that. They've said that they're not really focusing that much on rarity. So I think they're all going to have unique characteristics, but I think there's not going to be any characteristic, I don't think, that's like super, 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 super rare, right? And they've said they just basically want people to like go get the ones that they like. You know what I mean? Like if you like one that has like a specific type of hat or something, you just like go get it, you know? And that's kind of like the community that they want to foster, which I respect. I like it. Like
Very
there's
cool.
no like,
That's cool.
you know, no one's really going to be like, I think, revealing them and then because it's not super rare, like posting it, hopefully, you know, or listing it.
Yeah, we'll definitely have to circle back to it. I'm excited to hear more down the road.
Yeah, maybe you guys will become rebels next time. We'll see.
Yeah, it also might be helpful for those watching if we want to. I know we've referred back to kind of the episode where Sia took us through the things that he looks for in NFT projects. Might be helpful to kind of link that as well. But super awesome. Thanks for sharing, Zoe.
Yeah, thanks, Zoe.
That was great.
Of course, guys. Of course. Well, I think, you know, that kind of does it. We're at about an hour. So that kind of does it for this week. Obviously, a lot to talk about. Super entertaining episode. If you guys enjoyed the show, definitely like and comment and subscribe down below. But yeah, we'll be back same time, same place next week. Next week, NFT NYC. So I'll be reporting live from the event. I'll let you guys know kind of how it's going and everything, but definitely going to be a lot to talk about next week. Hopefully, you know, some interesting stuff comes out of the conference.
I love that. We'll have to live vicariously through you twice now. That's awesome.
All right. Well, till next week, signing off. As always, wag me.
Wag me.
Later,
fellas.